NASDAQ now down more than 1%. Joining us now is the National Economic Council Director, Brian Deese from the White House. It's good to have you, Director Deese. Welcome.
It's good to see you.
So I know we're going to talk about inflation clearly, and I know you want to keep the Fed a little bit separate, but do you sort of wish that the Fed, I don't know, might take a pause as we see inflation numbers coming down and the impact starting to damage the economy?
Well, you're right. I'm going to leave the Fed's decision-making and the communication that they made today alone for the reason that we don't comment directly on their policy. What I would say is if you look at the macroeconomic context over the course of the last couple of months, I think what we're seeing is continued progress and continued resilience toward what the president has been talking about now for months, of this transition toward more stable and steady growth. And I think that that's what we all want to see. And we are seeing some meaningful progress on that front. Resilient consumer, resilient labor market, and now a couple months in a row of inflation showing positive developments in terms of cooling. There's more to do, but certainly we're seeing progress.
Right. And so the Fed chair himself said that there's a lag to monetary policy, as we all know. What are your expectations as a White House economist about what the lagged impacts are going to be on the economy of these higher interest rates?
Well, look, certainly the monetary tightening cycle operates differently across different sectors of the economy. Certainly housing is one place where we have seen a pronounced impact. And one of the things that's interesting about the inflation data that we saw come out yesterday is that we're seeing a sort of a peaking of the printed inflation data on housing at very high levels. But what we know in terms of real-time data in the market is that market rents and housing prices have started to turn over. And so, what you need to do is balance what the data is showing. But what we try to focus on mostly is what's happening out there in the economy. What are people experiencing? What are businesses experiencing? What are households experiencing? And so certainly you got to navigate those lags. They operate differently in different contexts. But, one thing I will say, practically speaking, is that households and businesses over the course of the last 8 weeks, 10 weeks, have been experiencing significant declines in energy costs. That's true at the pump for households, down about $1.70 since the summer. It's also true for businesses. We've seen meaningfully declines in the cost of diesel, for example. And so those are, again, some promising signs, but also things that we know are happening real time in the economy right now.
Where does inflation go next year?
Well, look, we're going to be careful about and cautious about trying to predict the future. There's a lot of uncertainty out there, uncertainty globally, and we need to factor that in. And as the president said yesterday, we have more work to do to see inflation come down. But what I would say is that the signs we are seeing now are promising, promising across goods, promising across services outside of the housing sector. And as I said on housing, there's reason to believe that in the actual market environment, we're seeing progress as well. So I think the outlook right now, I think, is progress and more optimism, cautious optimism that we are seeing movement in the right direction than we would have seen a couple of months ago. But we have a ways to go here. We have to keep our head down. And on the policy side, we need to continue to focus on things that can help to lower costs for American families, lower costs for American businesses. The good news on that front is a number of the provisions that we enacted this summer are slated to start on January 1st. So a couple of weeks from now, we're going to see more progress on the policy front in areas like healthcare and energy.